Good morning, our dear learners from wherever you are, and all other viewers. Welcome to Elimu Live on KUTV. I am teacher Donald Ndombi from M-Pesa Foundation Academy, and I want to take us through the topic income tax. Before we go to income tax, just a quick review. In Form 1, you did a topic called Commercial Arithmetic 1. Now, let's remind ourselves, what did we learn in this topic in Commercial Arithmetic 1 in Form 1? Yes, 1. Currency exchange. Currency exchange, where you looked at the various currencies that are used in different countries. For example, in Kenya, we use basically the Kenyan shilling. Then in the United States of America, they use the dollar. So every country has different currencies. If you moved from Kenya to South Africa, in South Africa they don't use shillings. You will have to convert your currency into South African rands. You also looked at profit and loss. Then you also looked at commission. Then you looked at discount. So these were covered in Form 1. Then in Form 3, we have Commercial Arithmetics 2. So what does Commercial Arithmetics 2 cover? Commercial Arithmetics 2. Now in this topic, the subtopics under Commercial Arithmetics 2 include 1. Simple interest. Simple interest. We also have compound interest. We also have hire purchase. Then we have income tax. Now I know you already have looked at simple interest, compound interest, and hire purchase. So we cannot look at all of those in one lesson. So we will be taking a lesson on each. So today we look at the last one, which is income tax. And a quick reminder to you that I've been looking at KCSE past papers since 2006. And in every year, paper 2, there's no single year when a question missed on commercial arithmetics. So it is either on income tax, on simple interest, compound interest, or hire purchase, a question. And this can be in section 1, short answer questions like 3 to 4 marks, or it can be in section 2, which is a total of 10 marks. Now, let's go to our today's topic, which is income tax. So get your pen and piece of paper ready. We want to discuss income tax. A quick reminder to us that for those people who work, they get income in various terms. Others in terms of salary, others wages, others commission, we have fees and what have you. So all that constitute what we call income. So we need to look at the main terms associated with income tax. So by the end of this lesson, you should be able to explain to us the terms associated with income tax. You should also be able to calculate someone's income tax, what we also call payee or pay as you earn. You should also be able to calculate the net income that someone earns after all deductions are done. Then you should be able to calculate the basic salary if we give you someone's income tax. Now, the first term that you need to understand is gross income. So the terms associated with income tax. The first one is called gross income. Now, what is gross income? Gross income is the total income that an individual earns plus all other allowances. So in simple terms, gross income is the sum of the basic salary plus allowances. Basic salary plus allowances. When we talk about allowances, what do we mean? When someone is employed, you can be given a house allowance because the company does not host you. So they give you some money so that you can pay rent from wherever you stay. That's called a house allowance. They'll also assume that you commute to work. Maybe you don't drive. If you drive, you need fuel. So you are given commuter allowance. You can also be given medical allowance. If you fall sick, you can use that money to get treated in a hospital. So that is called medical allowance, and any other allowance, hardship allowances and what have you. So all those allowances plus the basic salary form what we are calling gross income. So it is very important for you. You can even use initials and just write gross income equals to basic salary plus allowances, like that. That will make your work easier. Then another term that we need to look at after looking at gross income, then there is the second term which is called taxable income. Number 2 is taxable income. Now, as the name suggests, we have already looked at gross income. Then we are talking about taxable income. What does taxable income mean? This is the income on which tax is levied. The income on which tax is levied. Now, if you are employed by a company, we have already talked about gross income, which is your basic salary plus all allowances. So to get the taxable income, we take your gross income minus all other special benefits or expenses incurred while you are on duty. So in other terms, taxable income is equal to the gross income minus expenses incurred while on duty. Maybe I explain some of these expenses. Let's say you used your own money to do a particular thing related to your job. That's what we are calling expenses incurred during your line of duty. For example, you worked till late and you took a cab home. So you used your own money. At the end of the month, that expense is given back to you. So we cannot tax it. So before we tax your income, we will take whatever you had, your salary plus all that, the normal allowances, minus what you spend during the month while you are doing your duty. So that we get what we are calling what? Taxable income. Then, after getting our taxable income, number 3 term is gross tax. We can also call it tax due or gross tax. What does that mean? So gross tax is the total tax calculated. This is the total tax calculated from the tax tables. Total tax calculated from the tax tables. In Kenya, the income tax that employees pay is regulated by the government through Kenya Revenue Authority. You've heard of KRA, Kenya Revenue Authority. So this body here ensures that it gives regulations on how people should pay income. For example, in the recent past, like 1 or 2 weeks ago, because of the COVID-19 pandemic and its effects, the government instructed KRA to revise their tax bands or tax slabs so that the maximum one can pay is 25%, depending on how much you earn. Initially, it used to be a maximum of 30%, but it has been revised recently, as we shall see in some of the examples. Then, after we have defined gross tax, the next one we need to define something special called a relief. Reliefs. What are reliefs? So reliefs are usually deducted from the tax someone is supposed to pay and this will include personal relief. We can have also what we call insurance relief. Insurance relief is what the insurance tells you. Let's say you are supposed to pay a premium of 12,000 per month, but the insurance company says we are relieving you 2,000. So this 2,000 is called an insurance relief. Now in Kenya, every person is entitled to a personal relief depending on the year. So there is mostly, it is usually 1162 or it can be 1056 depending on the tax rates of that particular year. That's called a personal relief. Then the last term that we need to look at is called the net tax. Net tax. Net tax is also called pay as you earn, payee. So in an exam situation, we can use these terms interchangeably. We can ask you calculate the net tax. We can also tell you calculate what? The payee. Or simply calculate the tax this guy pays. So all those are used interchangeably. Then another term, two more, then we look at an example. Another term is called deductions, number 6. Deductions. What are deductions? So deductions are other vote heads. For example, loans, insurance premiums, cooperative shares, hire purchase installments that are deducted from one's income apart from what? Apart from the income tax. Therefore, the first deduction that we know, the main one, is the net tax or the payee. Apart from the payee, every individual, some of the people they pay premiums to different insurance companies. Others have what even they call chama. So they tell the employer instead of giving me the money so that I send to my chama, they just give the account number so that money is deducted direct to the chama. Or loan repayments or cooperative shares. Or we can also say maybe you acquired something on hire purchase and you are paying installments. So instead of getting the salary, because there are so many other things due to budgeting, once the money gets in, something else comes in. So to avoid such cases, you instruct your employer that every month give 5,000 to so and so company where I acquired, let's say, a set of chairs or a television set and what have you. So those are what we are calling what? Deductions. So these ones, as the name suggests, they are deducted from one's salary. Apart from what? Apart from the tax. Then lastly, we have what we call the net income. Net income, it can be the net pay. The net pay, how much you will take home. This is what actually you'll get on your account after all deductions. So looking at what we've been defining from the beginning, then this is the same as gross income minus all deductions. Gross income minus all deduction. That will give you what we are calling what? Net pay. Now, can we look at an example? But before we look at the example, you need to take note of the following. 1, you must be sure in which units the table is. Most tables, the most common ones, you will see a table which looks like this. So we'll have an income here, then we shall have the tax here. So you need to be sure, is this income in Kenyan pounds, like that, or is it in Kenyan shillings? That is very important. This will help you to know if you are supposed to do any conversion. If the income is in shillings, then and the table is in pounds, you have to do some conversions. So you need to be very careful. Is the income in Kenyan pounds or in Kenyan shillings? Then on this other side, this tax can be given either as a percentage. The rate can be a percentage. If it is a percentage, it simply means this. If the income is in pounds and the rate is in a percentage, it means the tax we get is in the same units as the income. For example, if I'm taking 10%, 10% of 200 pounds? Then the answer is also in pounds, because this is a percentage, it has no units. And if I take also 10% of 20,000 Kenyan shillings, then the answer is also in shillings. So you need to be very careful on the table. Is the income in pounds or in shillings? And how is the tax? Is it as a percentage? Or there are other terms, they'll tell you it is in shillings per pound. Shillings per pound. Now this one is the most common. When it is in shillings per pound, that means the table on this side will be income in pounds, then the tax in shillings per pound. So for example, if we have 600 pounds and they have told you here they'll charge 2 shillings, that means for every pound they'll charge you 2 shillings. So for 600 pounds, they'll charge you 600 times 2. And this answer will be in shillings, because the rate is shillings per pound. So for every pound, 2 shillings. So for 600 pounds, that will be 600 times 2. And the answer will be in shillings. I've had students have a struggle here knowing, after saying shillings per pound and you have 600, when you multiply, is this answer in pounds or in shillings? Then it is very clear when we say it shillings per pound, and so for every pound you are charged 2 shillings. So for 600, that will be 600 times 2, which is 1,200 shillings, like that. So you need to be very careful. Then lastly, there's a special case. You know, different companies treat their employees differently. There are companies that have houses. Others don't have houses on site. So you live wherever you want. So let's look at these cases where there is housing. It is a requirement that it is expected that when someone employs you, they provide housing for you. But that is not always the case. That is why we have what we are calling a house allowance. So for housed employees, we need to know it's automatic that their house allowance is always 15% of their basic salary. Now this one, when we say it's automatic, it means we don't need to tell you in a question. Once you hear the word, the employee is housed by the company, it is automatic that the house allowance is 15% of the basic salary. Now some companies, you cannot just live in a company house for free, because they need to do repairs, they need to pay electricity, they need to do bills for water. So they'll charge you some small amount. That is called nominal rent. Nominal rent. So they'll charge you some small amount that you pay at the end of the month to take care of those other expenses that were incurred during the month. Therefore, that means when we are calculating house allowance for a housed employee, we shall take 15% of the basic salary minus the nominal rent. This is very important. But most questions, because we don't want to stress you, will always tell you that calculate the income tax, and in brackets you'll be told the house, it will be basic salary plus 15% of the basic salary minus the nominal rent. So nominal rent, we have said, is the small amount you pay towards the house you live in to cater for other expenses like electricity bills or water bills and any other repairs that were incurred during the month. Now let's look at the first example, example 1. Example 1. If you read, you can see from your screen, the table below shows income tax rates for taxation purposes in a certain year. So it's a certain year, not this year. So we have the monthly taxable income in what? In Kenyan shillings. Then what is the rate? Rate of tax in as a percentage per month. Then you have 0 to what have you, like that. Then in that year, Boke earned a basic salary of 18,900 per month. In addition, he was given a house allowance of 6,000 and 430 shillings, 1,200 shillings for medical and commuter allowances, respectively. He claimed a personal relief of 1162 shillings per month. Calculate A, his taxable income. B, his tax per month or payee. Then he also gave 2,800 and 1,200 towards NHIF and cooperative shares respectively. Find his net pay. Now where do we start? The first question is find his taxable income. So example 1, the solution. So part A, we want to calculate the taxable income. From our previous discussion, we have said taxable income will be equal to the gross income minus all expenses incurred during the month. But we've not been told that this guy incurred any other expense during the month. Therefore, in this case, our taxable income shall simply be our gross income, which is the basic salary plus all allowances. Basic salary plus allowances. So his basic salary, that is 18,900, add 6,000, add 430, then add 1,200. If you add all this, you should get 26,530 as his taxable income. That is the first part. You get 2 marks for that. Then the next one is asking for his tax per month or payee. His tax per month or payee. Now if we look at that quickly, the first thing you also need to do is looking at the table you have and your taxable income, 26,530. Look at that table. You need to identify in which slab. These rates we are given as 0 to 10, 164, then this other side 10%, like that. These are called slabs. So you look at the first slab, second slab, third slab, like that. So looking at 26,530, in which slab does it lie? Where is 26,530? Yes, it's in the third slab. It's between 19,741 and 29,316. Very good. Therefore, that means we will tax the first slab the way it is. We will tax the second slab. But when we go to the third slab, some care should be taken, as you will see below. Now, to make your work easier, I prefer you use this format. Though you can use any other, but this one helps you to check. So you make a table like this. You make a table. This side you write income, then this side you write tax. So the first income is 10,164. We always take the maximum. If it is a slab, you take the first slab, you take the maximum value. Then the tax rate is 10%. So we take 10 over 100 times 10,164. That should give us what? 16.40, because this is currency. Don't say 0.40. Then the next one, you take the difference between 19,740 and 10,164. You subtract these two. You take the upper limits of each band. You subtract those two to give us the next income here. So that if you subtract that, you'll get 9,576. Then what is the rate for that band? That is 15%. So we take 15 over 100 times 9,576. That should give us 1436.40. Then look at the next slab. We said our income lies in the third slab. Therefore, we cannot take 29,316 minus 19,740. What do? We need to see that the total income on our left should be 26,530. So far, we have taxed 10,164 and 9,576. So what to take here as the income, you take 26 on your calculator, 26,530 minus the sum of these two so that we get the next income. So you take 26,530 minus 10,164 plus 9576. If you do that on your calculator, what do you get? 1 minute. That's fine. You should get 6790. So then what percent do we take? We are taking 20%. So 20 over 100 times 6790. That should give us 1358. We put 0.00 for uniformity. Now then you add. I prefer this format. Why? You realize if I add what is on my left as the income, the total here should be what? Should be what was the taxable income in part A, 26,530. So if you confirm with your calculator, this one should be 26,530, the income that you had. Then this other side, add these three, this plus that plus this, to get the gross tax or the tax due. And if you do that on your calculator, you should get 3810.80. What was the question? The question was his tax per month or payee. Therefore, from this table, we have what we call tax due. Tax due, what was the other term for tax due? Gross tax. So our gross tax in this case is 3810.80. Now we were told something, that is, he claims a personal relief of 1162. So we write here relief equals to 1162.00. Then the difference between these two gives you what we are calling pay or net tax. So you take the gross tax minus the relief, and that is supposed to give us about 2648.80, and the answer is in Kenyan shillings. That is the tax that he is supposed to pay that month. That is the much that will be deducted from his salary as tax or as payee. Then part C, he also gave 2,800 and 1,200 towards NHIF and cooperative shares. Calculate his net pay. Part C, what do? We want his net pay. So by definition of net pay, we said net pay equals to the gross income minus all deductions. Now, to be sure and to make the person looking at your paper understand that actually you knew what you are doing, you can just list here the deductions. So you write here deductions. The first deduction, what did we say? The first deduction is what? Pay. The first deduction is pay. So you write here pay. How much? That is 2648.80. Then what else? We had NHIF. NHIF. How much is that? 2,800.00. Then what else? Cooperative shares. So you just write COP shares. COP shares will give you 1,200.00. Then add all these. These are all deductions. If you add those, what do you get? You get 6,648.80 as total deductions. Then from there, you can now get your net pay as net pay equals to the gross income, which was 26,530, then minus 6,648.80. So this will be 0.00. Then you subtract the 2. Then you will get here 2. Then this one is 18851. So This is his net pay, 15,881.20. Do not ignore this 0.20 because several of these will make it a big amount. So we don't ignore anything unless the question tells you round off appropriately. Otherwise, you leave your answer like that. We can look at another question. Question 2. Example 2. A company employee earns a monthly basic salary of 40,000 and monthly taxable allowances amounting to 15,000. So we already, you can start, you can maybe paraphrase, you don't need to write everything. You can just state basic salary equals to 40,000, allowances equals to 15,000. He contributes 3,000 towards a pension scheme and claims a personal relief of 1162 per month. The table below shows the income tax rates. Now look at the far left, monthly taxable income in Kenyan pounds. Then the rate of tax in shillings per Kenyan pound. Use the table above to calculate his taxable pay in Kenyan pounds per month, then his pay, then his net monthly, given that the following deductions are made from his income besides tax. You can take a screenshot or you can write just briefly. So the first one is his taxable. The first question is his taxable pay. Taxable pay is the same as taxable income per month in Kenyan pounds. So we remember taxable pay is basic salary plus what? Plus all allowances. So we remember that taxable pay is basic salary plus allowances. Same thing. Now in Kenyan shillings, that will be 40,000. We add 15,000. This gives us 55,000 Kenyan shillings. Now, if you leave it here, you will not have answered the question because it said his taxable pay in Kenyan pounds. Why are we insisting on pounds? The table is not given in shillings. So we have to convert this into Kenyan pounds. So what do we do? How do we convert to Kenyan pounds? In Kenya, ukisikia mtu akisema mbao, mbao means 20 bob, 20 shillings, right? You've heard that if you go to UK, a pound is not 20 shillings. It will be something else. It's called a sterling pound. So we must be specific. We are talking about the Kenyan pound, which is equivalent to 20 shillings. So 55,000 Kenyan shillings in Kenyan pounds, that will be the same as 55,000 divided by 20. So this gives you how many pounds? 2,750. You can confirm with your calculator, 2,750 pounds. Then part B. Part B asks you to find his pay in Kenyan shillings. So as we saw in example 1, the first thing you need to know is locate in which slab 2750 lies, so that you know you will tax up to where. So if you look at that tax table, 1 to 540, 541 to 1120, down like that. Where is 2750? Can you see 2750 in which slab does it lie? It is over 22, 24. It is bigger than all of them. So that means we shall tax slab 1, 2, 3, 4. Then the last slab we shall only get what is the excess of 22, 24. So again, make a table like the other one. So you have your income this side and you have your tax on your right. Income on the left, then tax on the right. So the first income is 540. The tax rate is 2 shillings per pound. So 540 pounds, that will be 540 times 2. And you get what? And this tax here we are doing is in shillings, but the income is in pounds. So 540 times 2 gives you 1080. Then to get the next income in the next slab, you take 1120 minus 540. 1120 minus 540. That should give you what? 580. So the next income here is 580 at a rate of 3. So that is 580 times 3. If you use your calculator very well, you should get 1740. Then the next one, you take 1532 minus 1020. 1532 minus 1020. What do you get? 1532. Sorry, not 1532. That should be 1723 minus 1120. What do you get? 603. 603 at a rate of what? At a rate of 5. So that will be 603 times 5. What is the answer? 603 times 5 is roughly, or is 3015. Then the next one, we take 2224 minus 1723. 2224 minus 1723. That should give you 501. 501 at what rate? At a rate of 7. So 501 times 7 on your calculator should give you what? 3507. Now, we pause for a minute. Our total was supposed to be what? The total income is supposed to be 2750. Now you look at, add all these values, then subtract from 2750. If you add all these values here, you'll get 2224. So if you subtract that from 2750, you get the last one here as 526. I repeat, to get the last one, this one, most students have trouble here. They assume that some of them want they get 540 and then you use 540 all through. That is not right. That's why I'm insisting that you take the difference between the income, the higher part of that slab. But the last one, you must add what you have already taxed, then subtract the sum of this, all this up to here. Subtract from the total, which is supposed to be 2750. So the total here is 2750. You can confirm. Then 526, we are taxing at a rate of 8. So that is 526 times 8. And that gives you 4208. 4208. Now add all this. If you add that, should give you 13,550. 13,550. What was the question? We want to find his payee. So what does this 13,550 represent? Does it represent the net tax? No. What does it represent? It represents what we are calling tax due or gross tax. So our gross tax in this case is 13,550. Then we were told he is entitled to some relief, and the relief was 1162. So we take 1162, subtract, then we get the net tax or the payee as, if you subtract those two, what do you get? You get 12,388 Kenyan shillings. So that is how much tax this employee pays per month. Now lastly, part C, we want his net income or his net monthly pay if those deductions are also made from his salary. So the last part of that question, part C, we want to get his net pay. In simple terms, net pay is gross income minus deductions. As guided before, we said you are expected to list all the deductions here. So the first deduction, what did we say, is the tax or the net tax, which is 388. What else is deducted from him? You have 800 for NHIF. So you write here NHIF 800. What else? 2% of his basic salary on union dues. So union dues is 2% of the basic salary. So on your calculator you take, you can work it somewhere. 2%, that is 2 over 100, times the basic salary, which was 40,000. 2% of 40,000 will give you 800. Union dues 800. Then cooperative shares. Cooperative shares, he contributes how much per month? 3,800. 3,800. Now add all this, then your total deductions will come to 17,788. These are deductions, but the question does not ask you to look for deductions, but we are finding his net pay. Therefore, his net pay will be the gross income we already calculated as 55,000 less 17,788. If you use your calculator, his net pay in Kenyan shillings is 37,212. That's how much this employee takes home every month. Now we need to look at another question that talks about housing. And just a reminder, ensure always you read every bit of the question. Some students only look at the table, then start calculating. They don't know even what they are calculating. If you are in a discussion, you start wondering, what are we finding? So it's important for you to know, to write down. If it is, you can see the way I'm starting. But see, I start with net pay. I know I'm looking for this. If I'm looking for the tax, I start with the table. If I'm looking for the taxable income, I write taxable income. Don't just write C. Then you might write C and then do deductions. At the end of the day, you stop here. So you will not have answered the question. So it's important you break down the question. If I'm looking for net pay, you write there net pay. Now example 3. Let's look at a case where someone is provided with a company house. What happens to such an employee? It says the table below shows monthly income tax rates. Then we have the table there. Jane earns a monthly basic salary of 38,000. So there is an employee called Jane who earns 38,000 as basic salary and is provided with a house at a nominal rent of 1,200 per month. Besides the basic salary, she is paid 3,800 and 2,700 shillings as medical and commuter allowances per month. Calculate her taxable income per month in Kenyan pounds. Why are we talking about Kenyan pounds? Look at the table. Monthly taxable pay in Kenyan pounds. Then rate of tax in shillings per pound. That means we must look at the taxable income in Kenyan pounds. So part A, we want to look at her taxable income. So you write here, taxable income. Then keep writing the formula so that it becomes part of you. Taxable income is gross income plus allowances. Gross income plus allowances. So in this, I mean basic salary or gross income. Basic salary plus allowances. So in our case, this will be 38,000, which is her basic salary, plus what were the allowances? We had 3,800. What else? 2,700. And there's another income or an allowance that is hidden. Which allowance is this? The house allowance. How do you know she gets a house allowance? You are told she is provided with a house at a nominal rent of 1,200. That means her house allowance is 15% of her basic salary. So we do our calculation from elsewhere. You do So this was basic salary. 3,800 was what? Medical allowance. Then 2,700 was commuter allowance. So we do house allowance. House allowance will be 15/100 times her basic salary, which is 38,000. Then out of this, what do? We subtract the nominal rent that she pays. How much was the nominal rent? 1,200. So we subtract this. After this, the answer we get here, you can calculate that very fast. So we add 38,000 plus 3,800 plus 2,700 plus the answer we get here. If you add all this together, if you are very keen, you should get 49,000 as the taxable income. 49,000. That is in Kenyan shillings. Remember the question said, find her taxable income in Kenyan pounds. So what do? How do you convert 49,000 Kenyan shillings into Kenyan pounds? Taombao. How much do you pay when you hear that? 20. So we divide this. So in Kenyan pounds, we say that is 49,000 divided by 20. And this is how many pounds? That should be about 24.50 pounds. That is her taxable pay in Kenyan pounds per month. Then part B, calculate the total tax she pays per month. Okay, part B and C are asking the same thing. So we will match them. The total tax she pays per month. Then she's entitled to this. What is the net tax? So the gross tax, part B, we are looking for gross tax, which we are saying is always obtained from tables. So you write this side income, and it is in Kenyan pounds. Then you write this other side tax, and the tax is in Kenyan shillings. Now, where is 2450? We need to locate it. 2450 is in which slab? The first slab goes up to 510. Next one 1020, 1532, 2048, 2564. So where is 2450? In which slab? The slab whose rate is what? 6. It is between 2049 and 2564. So we start taxing. So the first income, as you can see, is 510. We tax it at a rate of 2. That will be 510 times 2. What do you get? 510 times 2, you get 1020, 1020. Then the next one, you take 1020 minus 510. 1020 minus 510 gives you 510. Then we tax it at which rate? 3. So it's 510 times 3. What's the answer? 510 times 3 on your calculator is 1530. You can confirm. Then the next one, we take 1532 minus 1020. 1532 minus 1020 quickly. That should give you 512. Then at what rate? At 4. So that will be 512 times 4, and you get 2048. Let's continue. The next one, 2048 minus 1532. 2048 minus 1532. That should give us 516. At a rate of 5, that will be 516 times 5. You get 2580. Now we cannot subtract the next one. Now we need to add all the income that we have taxed already, 510 plus 510 plus 512 plus 516, subtracted from what? The taxable income, which was 2450. So the total here should be 2450. So you take 2450 minus the sum of all these four. This plus this plus this plus this. Then you take from 2450. That should give you 402. So we take 402 at a rate of 6, and that should give us 2412. 2412. Then add all these values, 10, 20 plus 15, 30 downwards. That should give us a total of 95, 90. 95, 90. So our gross tax is 95, 90. What? Kenyan shillings. 95, 90. Then part C is asking for the net tax. So part C, we want to look for net tax. Net tax, we have agreed, is gross tax minus relief. Minus relief. So that should be 95, 90 minus, what was the relief? The relief was 1820. 1820 minus 1820. So the tax this guy pays to the government, this was who? That was Jen. So Jen pays to the government 95.90 minus 18.20, which will give you 77.70 Kenyan shillings. 7,770 Kenyan shillings. Now part D. Part D, calculate her net monthly income. Her net monthly income. Her net monthly income. So part D, we want the net income. We use these terms interchangeably: net income, net pay, net salary, take home, all those. So what is her, how do we calculate net income? That should be gross income minus deductions. Gross income minus deductions. So we list the deductions in this case. What are the deductions? The first one we said payee, a payee of 7,770. What else? Did we hear of anything she contributes to what or what? Nothing. So in this case, because they have not told us about NHIF, NSSF and other deductions, the only deduction is payee. Therefore, her net income will be the gross income in Kenyan shillings, which was 49,000 minus 7,770. If you subtract this, what do you get? 41,230 Kenyan shillings. Care should be taken actually, and it's obvious, it's common sense. You cannot subtract 2450, what was our taxable income in pounds, minus this one. You see, the pay is already higher. This is in shillings. You cannot subtract shillings and pounds. We can only work with the same units. So if the question is talking about pounds, everything should be in pounds. But the moment they say calculate her net monthly income, in most cases in Kenya, our salaries are not paid in pounds. We get them in shillings. So your answer should be, when they don't say in which units like this one, calculate her net monthly income, just like that, your answer should be in Kenyan shillings. Don't leave it unless you are told. Okay. The last question, question 4. Now let's assume you have a case where you are given someone's payee, then you are asked to look for the basic salary. That is what you guys call reversed taxation. This one is rarely tested. I think it was tested in which year? 2014, 2017 there. Rarely tested. It is always the forward taxation. So question 4, the table below shows income tax rates for a certain year, taxable income in Kenyan shillings per month, and rate of tax as a percentage. In a particular month that year, Ngeno got a house allowance of 12,000, a relief of 1056, and paid a pay of 8040. Calculate his gross tax, his taxable income, and his basic salary per month. Now in this case, we are working backwards. You've been given how much tax he pays, so we want to look at how much does he earn, what we are calling the basic salary. So how do we start? The first one is we want the gross, calculate his gross tax. Gross tax. Now we've been doing this. We've been saying payee equals to gross tax then minus relief. Now if we do this basic equation here, now we want gross tax. What do we do? In grade 3 there, they'll tell you take relief to the other side. So that means you add relief on both sides. So our gross tax equals to payee then plus the relief. Payee plus the relief. So the payee, which was 8040, then you add 1056, which was the relief. This gives you a gross tax of 9,096. That is part A done. Part B, you are asked to calculate his taxable income to the nearest shilling, his taxable income. Now, what we shall do here, we need to be very careful. We shall still use our table as before, which was income on this side and tax. So our income is in shillings. Our tax will also be in shillings. Why? It's a percentage. So if you take 10% of 50 shillings, the answer is in shillings. Now in this case, we shall be, our eyes will be focused on the tax, such that at the end of the day, what we need to have as the total on this side should be what? 9,096, which is the gross tax. So we already have the answer here as 9096. So whatever we want to tax here, the total tax should come to this. So what we shall do, we shall be taxing as we look at the values here. So the first slab is 10,164. We take 10% of that. That should give us 0.1 times 10,164, and that will give me what? 1016.40. Then you try and see the difference between 1996 and 1000 is too large. So we continue taxing. So we go to the next slab. If we take the difference between the upper limits of the slabs, we shall get what? We will get the next one as 95.76. So we take 95.76. At what rate? At 15%. So we shall have 0.15 times 95.76. And that should give us 1436.40. Again, try adding. This is 1,000, 1,000. This is just 2,000. From 9,000, we still have a lot. So we continue taxing. The next one, if you subtract 29,316 minus 19,740, you still get 95.76. 95.76. At what rate? 20%. So that is 0.2 times 95.76. And that gives us 1915.20. Look at the next one. If I add this 1,000, 2,000, 3, so roughly 4,000. We are still far. So we tax once more. So the next one, if you take 38, not 38. If you take 38,892 minus 29,316, you still get 95.76. 95.76. At what rate? 25. 0.25 times 95.76. What's the answer on your calculator? 2394. 2394. Like that. 0.00. Now, if you look at the table, we have rigged the last slab. So that means we need to tax something at 30%. So we say whatever we are taxing, we don't know. And whatever we don't know, we put a letter of our choice. We can use X or you can use N, whatever letter you want. What percent of X do we want to take? 30%. So that will be 0.3 times X. Now what do we write here? We need to know if I add this 1016 plus 1436.4 plus this plus whatever is here, the answer is supposed to be 90, 96. So what do we do? add this on somewhere on your calculator. This plus this plus this plus this. All these subtract from 1996. That difference is what we write here. Or simply put 1996 minus, then open bracket, this plus this plus this plus that. So if you do that, then you are likely to get 2334. 2334. Therefore, we have an equation, we have something unknown in our working. We have 0.3 times x equals to this. So can we solve this equation here, down here? Then this side, leave it blank because we don't know the total income. So what do? We write 0.3x equals to 2334. What do we do? How do we get x? We divide both sides by 0.3. 0.3. This cancels that. And our x becomes what? Our x is 7780. 7780. Now this question, no one asked us about x. No one even asked us what we are supposed to tax here. So therefore, what is our gross income? Our gross income will be the total of all this plus this plus this plus this, plus the value of x. So that will be 10,164 plus, I have how many? 95, 96, 1, 2, 3. So plus 3 times 95, 76 plus x, and our x is 7780. So if you add all these, you get your gross income in Kenyan shillings as what? 46,672. That is the gross income. So what was the question? Is taxable income to the nearest shilling. So we have answered the question of taxable income. So the taxable income is 46,672. Then now, last part C, which is talking about his basic salary per month. So part C, we want basic salary. So we need to remember the other equation, that gross income equals to basic salary plus all allowances. So what does this tell you? How do you get basic salary from this basic equation here? How do you get basic salary? Yes, we take basic salary equals to the gross income minus allowances. So the gross income is 46,672 minus, what were the allowances given? Ngeno got a house allowance of 12,000. So our house, the only allowance is a house allowance of 12,000. So we subtract 12,000. If we subtract 12,000 from this, then our answer is 34,672 Kenyan shillings as the basic salary Ngeno earns. Now, as we wind up, I wish to advise us that we have so many versions of questions on income tax. So many of them. Like there are years where it is back taxation. There are years where it is direct, the way we have seen. So like if you look at KCSE analysis, you realize since 2006, we have rarely had a year when there was no question on income tax. If one question missed on income tax, then that year they asked on other things, on other parts of commercial arithmetic. For example, in the year 2019, last year's paper, and that is paper 2. All this is in paper 2. Commercial arithmetic 2 is in paper 2. 2019, you check question 12. That is in section 1. I know some students say, I'll not do income tax, it's always in section 2. Ask last year's candidates, was it in section 2? It was in section 1, question 12. 2018, there was a question there. 2018, that was question 23. 2017, yes, there was a question there, question 17. Now 2016 and 15, there was no question on income tax, but those questions on commercial arithmetic were on hire purchase and the other one on compound interest. So there's no year a question is missing on commercial arithmetic too. Then 2014, lastly, you will check question 19, that will be income tax. And this one is on reverse taxation. So you can check, keep revising. So what do we do next? At the comfort of your home, I know you can access to various materials. For example, there's the book called KCSE Made Familiar, what you guys call KMF. Look for KCSE Made Familiar. Look at the questions on income tax. That should be chapter 27. Answer all those questions on income tax. You can look at topical questions at the end of the textbook. That will be KLB. You can be using Discovery Math, Advancing in Mathematics, and what have you. And there is a website that is for free. It is called teacher.co.ke. Make use of this site. So if you type in your browser, whether you are using a phone or a laptop, teacher.co.ke, then you can go to free resources, Form 1 to Form 4. You can decide if you want notes. You can check PowerPoint notes. You can check topical revision. You can check so many things here. I was checking this morning, like the topical revision papers, all of them are KCSE past papers. So that will really help you as a candidate, a Form 3, a Form 4, preparing for KCSE. Otherwise, I want to wish you well. Wherever you are, stay safe, continue revising. KCSE is still on, as our CS said. Goodbye for now. I'm Teacher Donald. Keep watching Elimu Live on KUTV from wherever you are. Thank you.